The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show with the DAX index, but before we do that, we want a caller coming in today. Norm Winsky, are you there, my friend?
Yes, sir, Larry. Good morning.
How are you today, buddy? Listen, here you want to put the pedal to the metal and put your good news out to us about what's happening right now astrologically?
Yes, sir. The thing I want to alert the folks about is that tonight, after the close, or in the wee hours tomorrow, we have Uranus turning retrograde in the sign of Taurus. And Uranus has to do with copper, and specifically, and in the sign of Taurus, that would be your cattle, cotton, and of course the stock market is always involved in any important planetary events. So those are your, let's see, you got about 4 markets there to keep an eye on for a important change in trend. Uranus is also associated with, when this happens, a seismic activity. And you might have seen in the news where overnight we just had a big earthquake in Indonesia. I just checked before we went on the air there, and they're up to about 98 people dead in Indonesia. So you know, it's Uranus shakes things up, you know.
Wow. Norm, I had an email from someone from across the pond over the weekend asking about the possibility that there's several other planets that are going retrograde during August. Is that correct?
Well, we already have, let's see, we already have Mars going in retrograde now. We have Mercury in retrograde. I'd have to check some of the other markets. I think at some point we're going to have like 5 or 6 planets all retrograde during the month of August.
Oh, that's an unusual event in itself, isn't it?
Yep. That doesn't happen very often, but every now and then, you know.
Mm-hmm.
So anyway, I just wanted to give the folks a heads up. I'm due to be on later in the week. I think you got me scheduled for Fridays to talk about. At the end of the week, we got the solar eclipse, so I'll be going into detail about that and what's happened since I was last on your show.
Is that the solar eclipse that we're having? Is that going to be a super new moon, or is that going to be just a normal new moon?
No, I think that we're going to have the moon again at perigee, but that'll be the last one for a while, you know.
Okay, that's good. Well, we'll look forward to having you on Friday then. How's that?
That sounds great. Everybody have a great week, and keep your seatbelt on, because we could be rocking and rolling on the stock market since we're near the highs. Usually what happens is when these planets go direct or retrograde, the market usually gets polarized. It usually moves to some extreme, and I would guess that we would get to either test the recent highs. We last retrograde, I think we had Mercury turn retrograde around the 26th, and I think 26 was the last high we had on the S&P and Dow Jones. So we're going to probably retest that high, and we could possibly, even if we get it rocking and rolling here, now we're not that far from the January high now, I think, right? The 2872 area, right?
Indeed, we really are. We're not very far away at all.
So 1 to 2 days out, we could be there, you know. So I'm not making an absolute prediction, but if we get there in the next 1 to 2 days, there's a good chance we're going to make a nice little trading top there, and you might have an opportunity to make some money.
All right.
But we'll take a look, see how we're all worked out when I come back on Friday.
Well, thank you very much, and we'll look forward to seeing you on Friday then, Norm.
Great. Thanks a lot for having me on, Larry. Everybody have a great day.
You betcha. That was Norm Winsky of Astro Trend out of Naples, Florida. Folks, we're going to take a look at this DAX index, the 60-minute chart. We had a move up to the 61% retracement, and then right after we hit that, folks, it just dropped like a rock to get below 12,600 again. Whether we're going to make another bottom in here, we'll have to wait and see, but these markets are getting a little jittery, whether it's related to some of these things that are astrological or not. we don't know for sure, but no one knows that. So that's the key. Boys and girls, I have an important announcement to say. We look at these charts and we look at a whole other things, but let me tell you the real true meaning of life. We have a 5-year-old having a birthday this week, and we had a nice party for him yesterday at a really nice restaurant with some friends. And the little 5-year-old, his grandma asked him, well, what is your best present today, Mitchell? And Mitchell said, my best present today is my family. And I tell you that the whole table was silent. I think from a 5-year-old, that was number one on my bucket list. I changed everything on my bucket list after hearing that. I thought that was about as coolest thing as I've ever heard any 5-year-old say. And they're really hard to confuse because they only know one thing, and that's being truthful. So it was really great to hear him say that. And of course, when we left the restaurant, he said, "Can I have that $20 now, Grandpa?" No, anyway, but the fact that he said that was really good. Let's move on now to take a look at the FTSE. That's another one that's had a pretty good rally, and it had a little bit of a more complex bottom than we had with the DAX, but we also went exactly to the 61% retracement. So we'll take watch that very closely because that's also sold off from that level. Folks, last week when we were on here, we had the same pattern that we have now. I want to get this up here. This is, you hate to beat a broken drum, but this is what you have to do. You have to do. But a broken drum, you just can't beat it. There was a restaurant in Santa Monica, California, called the Broken Drum, and of course their moniker was the Broken Drum, you can't beat it. And we used to eat there all the time during the old days of Drexel Burnham and Wilshire Coin and all the coin deals and stuff that we did. Let's take a look here at this Dow, the E-mini S&P. I posted this last week. We have 4 major ABCD patterns coming up here at 28.50. We got to 28.45 last night. We sold off to 28.38. We've been hanging around that level all morning, but there are 4 major levels out there. Now, the interesting thing about this chart, and I think it's very, very important, because the low that we made on Friday, and that was basically a 5-day sell-off in the Dow, in the E-mini S&P, stopped exactly at the 382 retracement of the low that we made back on July the 5th. So that really tells you a whole lot about what to look for as far as trend, because if we get below 27.90, now that's a long way from where we are right now, but if we get below that 27.90, that's going to confirm the downtrend that would be similar to the one that we had when we had the full moon and lunar eclipse back on the 29th of January when the market had a 10% correction. And that, I think the last time we had a 10% correction was 1926 before the big top in 1929. But anyway, this is a very important ABCD pattern up here with all of these. We've seen a big divergence between the NASDAQ and the Dow Jones. That's been just jumping all over the map. And then also the New York Stock Exchange Index. If we look at that divergence, yes, when Hector was a pup, Terry, you're correct. And that pup is about 25 years old now. Anyway, if you'll look at this, the NASDAQ, let's get back to this, folks, right after the break. The New York Stock Exchange Index is important to look at from where we are right now, but we'll cover that right after the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I believe we have a caller in today. John, are you there?
Pesavento, good morning to you.
Good morning, Mr. Z. What's up, buddy?
They give us an update. Is it still 110 by day and 99 by night out in Tucson?
No. We're in the midst of the monsoon now, so we're not going to get any higher than about 100. It rains almost every day. We get about 1 or 2 inches in a downpour, but it is going to be this goes on until September the 15th. But this year, John, we've had virtually very little rain, so the soybean crop here in Tucson is quite meager this year. Actually, they grow Pima cotton here. This is where Pima cotton started, was here in Tucson. It was a Chinese couple that started, that left a huge amount of money to the city after their family passed. Well, the family's still there, but their foundation put up a whole bunch of really great things for the folks to do here in Tucson. But they developed Pima cotton. I was really surprised to know that. But that's about it. What can I do for you, my friend?
That's interesting history. Larry, I want to ask you a very specific question on T-bond futures. Just by way of background, the T-bond futures sold off decisively this year and bottomed May 18th. And that was at that low, all sorts of shorts were in the market. And then the shorts got squeezed hard in the last week of May, when the Italian bonds exploded in yield as there were some government transition snafus occurring in Italy. Mm-hmm. So that's the history. Right now we're at 143. Please help me with trying to answer this question. How are T-bond futures at 143 or so now? How are they going to get up to 148? And should we speculate on that on the long side, with the idea of getting up to 148, taking gains, flipping and going short up there?
John, the only way that I could see that treasury bonds could get to 148 is if we have a flight to quality where people move from stocks to bonds. That's certainly possible because we're up in an area where we have all these ABCD patterns in the S&P and the New York Stock Exchange Index and the Dow Jones. We don't have it in the NASDAQ, of course, but that's the only way that I could see we could get there. That would be a perfect ABCD pattern. The low we made was 139 up to 146, down to 142, and then that would take us up to 148, which was the breakout, you remember, of the 78% level way back in January. And that would be a really, really interesting spot to go short there, because you'd have a big ABCD pattern on the weekly chart, and you'd be looking at a perfect 382 from the high we made back in August. So if we did get there, and believe me, if we get there, that's going to hurt a lot of people, because there's a lot of folks that are, very short this market. If you remember this morning, Jamie Dimon came out with a 5% call on the long bond. You'll be looking at 112. Or no, even more than that, CB. Yeah, about 110 on this bond if we get to 5% yield on the 30 years. So that's what's out there, but that's what I'm seeing. I'm still bearish. I think if we get below 141, we're heading down to 138 and lower, but we could easily get to 148 and even 149 if we get some type of a flight to quality. And the only thing I can see is it'd be related to a flight to quality in the stock market, or maybe the U.S. dollar trade type stuff, which is, that's in the news all the time. But that's what I'm looking at.
Larry, thanks for sharing, and thanks for posting that daily T-bond chart in Tiger TV. I'm looking at that, Larry, and that picture is very clear to me. Namely, the low last Friday and Thursday completes a right shoulder of a head and shoulders bottom. So I'm looking at that, and I'm thinking we get just that surge to 148. I'll share two other things that are impacting my mind right here. One is Bill Meridian, and Bill repeatedly showed us, thankfully, via your conversations with him here on TFNN, that shared back in May and June how T-bond futures are decisively bullish seasonally during the month of July and August. Mm-hmm. That's point number one. Point number two, the U.S. stock market, of course, the S&P is retesting highs, and you just 5 minutes ago documented the patterns that you see. And I'm reminded back in 2017, 2015, 2014, each one of those years, off of extended rallies in U.S. stocks, there was a tradable decline. Not a bear market, clearly, because we've been in a bull market since, but a tradable decline. So I'm just thinking right shoulder of head and shoulders bottom intact on the bonds, Bill Meridian cycle strength here in August, and potentially a multi-week trading decline in the U.S. stock indices that I'd love to be long, and then love to flip short in bonds at 148. So thanks for helping me round out things as you see it.
John, there's one other thing, and I just posted it, and that's in the Treasury notes. If you notice the Treasury notes, we didn't make a lower low in July like we did in the bonds. In June, the notes were higher in July than they were in June, whereas the bonds went a little bit lower. That's a very positive divergence, which would lead to the idea that you're having that we could get a rally here in these interest rates, i.e., higher higher bonds and notes for a move up to that 148. That would be equivalent to about 122, about 3 points, in the Treasury note. So that is certainly a possibility. It all hinges, of course, on whether we can hold this 141 level in that 30-year Treasury bond, which so far we certainly have.
Larry, thanks so much for highlighting that T-note. That's the 10-year note futures with that higher low that you just mentioned. Just something that strikes my mind right here on T-notes. Now, of course, T-notes and T-bonds, they're very similar. T-bonds obviously have larger point volatility, but they move in the same direction, of course. One fact I can share with you that my suspicion is pivotal is that the CFTC's commitment traders data on the T-notes. Of course, T-notes are the largest fixed income instrument here in the U.S. The commitment of traders data shows a record amount of short sellers in that contract. And then today we have the statement by Morgan's chief executive, Diamond, to prepare for 5% interest rates in the future.
That must mean he's long.
What?
Hey, stay with us, John. Can you stay with us, please?
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we're back, folks, and before Mr. Z hung up, I wanted to talk to you a little bit about that Treasury note chart that we looked at, and also the fact that when Jamie Dimon says something, I mean, that's just like, you know, he has a big audience, and when people listen to him, you know, he has ulterior motives. We've seen this in Goldman Sachs and Warren Buffett and, you know, everybody else that has huge positions, and George Soros. They use the markets, you know, to provide liquidity for some of their positions. So, you know, trade what you see, not what you think or hear, because that's what the real pedal to the metal relies on, is whether these things move that way or not. One of the things in the bond market that I think we need to look at, and I'll just cover this very shortly, and that is if we look at the junk bond market, i.e. the high yield market, you notice that it has been holding up extremely well here. It follows the patterns very, very nicely. We've seen a head and shoulders pattern up at the high there. Back in July, September of last year, we had the big breakdown. We've got a profit objective down about another 4% from this level. But that doesn't mean we can't rally up to the 87 or 88 level, making another Gartley. So there's still that possibility that we could get lower rates here for a short period of time. Whether it's related to anything in the stock market or not, I don't know, but nobody else does either. So sort of pay attention to that. Now, I wanted to talk just a little bit about Bitcoin here, because we've been watching this cryptocurrency phase and blockchain technology for a long time. And I was watching a special on the History Channel this over the weekend, and they talked about the amount of data that's out there. Folks, do you realize in the last 5 years, there's been more data than in the history of the world? Well, the world as we know it. We can't go back more than about 10,000 years, but that's 5 years. It's got more than all of the history of all the data before. That's thousands of years. Now, what the History Channel was talking about is what the internet has done. If you remember those little Russian dolls that you open one and there's a smaller one, you open another one, there's a smaller one, you open another one, there's a smaller one. He said basically what the internet is the first Russian doll. And he said what these cryptocurrencies and stuff are going to do are blockchain technology. It's not cryptocurrencies, but the blockchain technology will allow us to open up these little dolls one at a time. And part of that is related to the cloud, which is another thing that has brought a lot of this data in. So it's something we need to keep an eye on. But when we look at this Bitcoin chart, we just had a 61% retracement, and now we're heading down. We've got a beautiful long-term ABCD that we've talked about here at TFNN on this show for, way back in January, that we have that large ABCD factor, that pattern that comes in right around $3,800 per share. We're trading at around $6,800 right now, so we're $3,000 a share. God, when you throw that number out, $3,000 a share, it sounds like a big number, but it's amazing. What people that look at this don't realize when they're watching cryptocurrencies is that Bitcoin, going back about 7 years ago, it's had 4 major corrections, all of them around 80%, and they've all this is the 4th one we're in right now, and that would take us down to roughly $3,800 to $4,000 a share. So we need to pay close attention. And it's not about cryptocurrencies. It's really about blockchain technology. I don't understand hardly anything about it. In fact, what I understand, you could write on the head of a pen in boldface type, but I am watching the charts. I'm following it closely. The open interest that we've had in the CME for the Bitcoin is very disappointing in my opinion. We're up to about 3,100 contracts, and we finished 2,000 in the first month or so, so there's virtually no interest in it right now. That doesn't mean it can't be in the future, but it's something that we want to pay close attention to. This chart that we're seeing here on Bitcoin, this is nothing like the tulip bulb mania, back in the 16th century, folks. That is not like that at all. This is a normal chart doing what it's supposed to be doing, having big corrections. And even though that $20,000 figure was pretty big, it's just making a normal correction. That's really all that it's happening, so pay attention. Regarding the grains, we have a big crop report coming in this Friday. This is going to be the last report, I believe, until the crop starts to come in. The question is how big is it going to be? Not how small it's going to be, it's how big it's going to be. But the $64 question is how much of it is going to be used? Because with our prices low now, it makes our grain really, really cheap compared to other countries. So that's basically knocking off whatever tariffs there might be in there. So, and the people are going to have to eat. There's no question about that. So we want to watch these closely. We made a major bottom down there at 8.30 in those November beans, and around $6 in that Christmas corn. So I think those bottoms are going to hold. The weather, the only thing that's going to affect the weather now, and this is the first week of August, it would take some god awful, really, really hot weather to affect corn and beans so much. But the problem could arise later on in the fall if we do get some wet weather and then some cool weather, because that could also affect the crop. But frankly, I wouldn't worry about that right now. I would worry about, what this pattern is going to look like, because we've had a really nice rally, $1 a bushel in beans. We got up to that 9.17 level. Now we're trading around $9. There should be good support in November beans down around that 8.70 level. That's quite a ways from where we are right now, about 30 cents. But the way these markets act, it could happen the next 2 days or the next 10 minutes. You don't really know. But these levels have made major bottoms at these spots, and it looks pretty good. Regarding the wheat contract was a very, very bullish, and you'll see what happened. We had huge run-up in wheat on Friday. That was spot on with a 1.27 expansion. And I believe that this market is for real. You want to watch for a 382 retracement in wheat to buy it, because something is going on in that wheat market. It doesn't make any difference about tariffs or anything else. There doesn't seem to be enough wheat out there to satisfy anybody. So pay close attention to this one, because it is defying, the laws of supply demand. So it's really looking that it's on its way to a much higher levels, because we did have a 30-cent pullback from the high, but it's holding up right where it should have. So it's a very, very interesting spot to look at. Folks, when we talk about these patterns and stuff, remember that when we're doing this, what you have to do is you have to realize that you got to have several reasons in order to buy something. You just can't listen to somebody like me or anybody, not just me, but anybody. You have to, make your own decision and try to get 3 reasons to buy something. A, you think it's going to make money. B, you only have to risk a whole lot. And C, it's a seasonal trade or something like that. But have a reason for trading. Now, if you trade pattern recognition, you have several things that you can put together to give you these reasons. You've got ratios and proportions that help you a great deal, but you got to have some reasons for trading, because it's not the amount of money that you make, it's the amount of money that you don't lose. And that's what you have to focus on, is the amount of money that you have at risk. It's like the slot machine. When you look at that slot machine, there's nowhere in that slot machine that it says you have no way of beating me longer term. Never does it say I've taken in $1.2 million more than I've given out. And those are the things that you have to remember. Those flashing lights are there to lure you to sleep. You want to stay awake in this business. Let's take a break, and we'll get back and talk some more about the gold and silver market. 877-927-6648.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a look at the gold market, but we also have to remember that today was a day that was a sad day in history, August the 6th. This is the day that the atomic bomb was dropped on Japan and killed, I think, 250,000 people, and it was supposed to destroy Japan for 100 years. And as you can see, in just a matter of a few short years, they built that up into a huge empire. And so things do change. You know, our enemies become our friends, but you never know. In these days, boy, it's hard to realize there's so much animosity out there. But let's look at the gold market here, since we're talking about animosity and the fact that nobody loves the gold market except one or two people. Raise your hand, Larry, but my hand is raising smaller each time. Folks, if this U.S. dollar gets above 96, i.e. the euro gets below 115, it's going to be really hard to be long gold and silver. That's basically what it's going to be looking like. But we are at a very important level here. Frankly, I think about the only chance that we have here in the gold and silver, it's related to cycles. I put that thing into the newsletter, of course, about the Fibonacci cycles that are there in gold, and I'll bring it up to you again, but that's due this week. And I think it could be related to some of these planetary things that we're looking at, these retrograde motions of some of these, but this is at major support now that we're looking at here in the gold market. We're trading at about $8 below the Fibonacci level that we'd liked. That was at 12.18, and that's still close enough. And the silver, you know, we still have a chance of silver getting down to $15.10 or $15 a share. We're only about 25 cents away in that level. Now, the platinum is acting relatively well compared to the rest of the markets. I'll put up the platinum chart on the daily, and you can see that we've had much higher bottoms now in the platinum. We're trading at around 829 this morning. We completed an ABCD pattern over the last 3 days that got up to the 843. We backed off a little bit, but it's starting to show higher bottoms. So we'll see if that's going to be the case. Marshall from the hot spot of Washington, where it's up around, what is it, up there about 100 degrees now, Marshall? Pretty close. It's got to be really hot for you folks, because I don't think that's anywhere near your normal temperature. But we're 89 weeks from that high, which is also important. But we've got 5 different Fibonacci cycles coming together there. If you'll look at them, you've got 8, 13, 21, 34, 55, 89. You've got all of them lining up. And whether that's going to mean anything or not, I don't know. Now, I believe in the astro part of it. And since we've got this eclipse coming in this week, which will be comes in on a Saturday, and then, of course, 2 weeks after that, we're going to have another eclipse, and that's going to be the another lunar eclipse. So that'll be a real interesting one, to look at also. So we'll pay attention to all of those as we look at some of these. So, but I think the fact that some of these are moving out of Taurus in retrograde motion, like we are with Uranus, and Taurus is the bull that might be enough to make things work. But I don't know. I'm just looking at the patterns. And frankly, I've been doing the astrology stuff for quite a while, and I have to rely on the patterns because that's what you put your 2 cents in. I mean, you think you know something about astrology, but you really are just guessing. Whereas if you're looking at a pattern, at least you don't have to guess. You know exactly how much you have to risk and whether you're going to be right or wrong or not. And you don't have to worry about being wrong because you're going to be wrong a lot, folks. Believe me, you can be wrong a lot more than 50% of the time and still make a lot of money if you let your losses, cut your losses short and let your profits run. An easier thing that's said than done, but you can do it with a little bit of practice. But it does take practice. There's no question about that. But we are close in these metals. I've been saying that for 2 weeks, but we're pretty much the same place we were 2 weeks ago. So there's not much of a difference from where we were at 12.20 and we're at 12.17, 12.18 right now. So there's not too much of a difference. The real key to all of this lies in what's happening with the U.S. dollar. And I want to bring this up here to show you where we are. And I think I know we're trading around 95.40 right now. But you'll notice here we've had 3 higher bottoms, very nice ones in the dollar index that equated to the lower tops that we had in the euro. And if we get the euro below 115, that means that this pattern that we're looking at here on the U.S. dollar is going to be breaking out to the upside. And that is going to be equivalent to a high-level consolidation from May 23rd. It's all the way, that's be 10 weeks of a high-level consolidation. Folks, this thing could really have legs if it starts to go. That would take the euro spiraling down to probably 108 from, at least 112 to 108 from where we are right now. And if you think these tariffs would cause problems, you can imagine if we get a forex war, with a currency war, then you'd really have some problems because you're talking trillions of dollars there, not billions. And that's when you'd really start to see some problems. But frankly, there's not really much showing on this. There's really little. I mean, they're showing these tariffs, and most people are not paying too much attention to them. That's really what it looks like. But whether that's going to continue or not, we have to wait and see. But that's what we're watching here. Each day we hear, some news coming out of it. Yet the market shakes it off and tells it wants to rally, and that's pretty much what's been happening with it. So we'll have to pay very close attention to it. Now, one of the things that I think from a value point of view that looks really interesting, and that is the look at December hogs, folks. I mean, we've been watching the hog market for quite some time. Let me see if I can get, well, I shouldn't bring that up because a lot of you folks don't want to trade hogs, but just for your own edification, take a look at the chart for December hogs, and you're going to see a market that has completed a beautiful 3 drive to a bottom pattern down here at this 45 level. Anything below 44, you'd probably be wrong. But, it's got a real chance to have legs here. And we're below the cost of production here in December hogs. If you've been with me here for the 10 years I've been on here, about 4 years ago, we had Rich Anderson on, and Rich was had his tap dancing shoes on, saying that you had to be long hogs, and they were trading it down in this level, right where we are now, below the cost of production, and they tripled in price over the next year and a half. So I don't know if that's going to happen again or not, but the fact that you get these prices in hogs down, the farmers are not going to grow hogs when they're down at this level. It doesn't make any difference how cheap corn is. They're just not going to be able to feed the hogs to make any money off of them. Lean hogs are, they're not easy to grow. They take a lot of effort compared to cattle. Hogs take a great deal of effort on a hog farm. It's not like raising cattle. It's a big difference. But anyway, watch that one. That one's very interesting. As far as the grain markets, that level of 870 in the November beans remains a very, very interesting point. Of course, we have that crop report coming in Friday. So next Monday's report that we have here will have some really good, ideas of where we're going to go. The wheat market still looks like it wants to go a great deal higher. Let me see if I can get that wheat chart up so you folks can take a look at that, because that has some really interesting patterns here. Let's just get this up here so you can see it. We made a big ABCD pattern in this thing on Friday, Let's just get this up here. Take a look at it. 877-927-6648.
My dad, may he rest in peace, always had great advice, such as, if you want more, you have to become more. It's been a guiding light that has driven me to always be the best that I can be. When it came to trading and investing, I wanted more, and so I developed a set of disciplined tools that led me to become the #1 market timer for the S&P 500, according to Timer Digest. Dad went on to say, if you want more, you have to give more, which is why I took those same disciplined tools and created a black box that could look at any instrument for any time frame and tell subscribers and I whether it was bullish, bearish, where support or resistance was, and whether an instrument was forming a top or a bottom. The scans from my black box are now a part of the Mastering Probability service, which allows me to give more to subscribers. This coming Tuesday, August 7th, from 5 to 6 p.m., I'm holding an open house at TFNN.com, and I'd like to invite you to see the power of my black box. When it comes to trading and investing, I know I can help you become more too. Just go to the homepage of TFNN.com to sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I did post a chart of the Christmas hogs and December hogs to show you the 3 dry pattern. They're up a little bit today. I've also put the chart in for the wheat. You can see it made the big 1.27 expansion up here. So kind of, keep a close eye on this, because if we get much higher in that wheat above those highs, this is going to make some of these other grains look pretty interesting to the rest of the world, considering they've had these big breaks and they're offering them at cheap prices. This is exactly what happened during 1972 when we were having the Russian grain robbery. You'll remember in 71, Mr. Nixon took us off the gold standard, and that put everything in motion with the U.S. dollar. We could be looking at something very similar to that again. That's why we need to watch the euro, because below 115 in the euro, folks, that to me means lights out for the euro and lights in for the greenback, and I would expect the dollar to really start moving sharply higher and the euro going sharply lower. We're seeing similar moves, of course, in the Canadian dollar, and we're also seeing similar moves in the Australian dollar. Our new guest today, our regular, I guess, our good friend John Fratt will be on the show now, which will be really interesting to listen to him talk. But he was very negative to the Australian dollar because of the effect of the Chinese trade, and we'll see if that's going to be the case. Anyway, we'll watch it very closely. The dollar yen is also affected by that also, so we want to watch it very, very closely. And remember, the Russell 2000 didn't even come close to making new highs, folks. So watch that. That was big divergence, and that was the leader on the way up. That was the first one to turn. It was the strongest of all of them, and of course, it topped back on June 19th, and we've not made higher highs since that time. So let's pay attention. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.